This is Matthew Kratter's Bitcoin University, and today I want to talk about something called print, pump, tax, and repeat. In this video, I'm going to show you how a government can use its money printers combined with an unrealized capital gains tax to steal 100% of your savings in a very short period of time. In this video, I'll be criticizing Kamala Harris's tax plan. So if you're a Kamala supporter, please don't let this factor drive you away from learning about the confiscation that could be coming and that will affect you and your finances as well. Now, Kamala just endorsed Biden's capital gains tax proposal for her campaign, 45% long-term capital gains tax, which is a much higher tax rate than we even had in the U.S. under President Jimmy Carter. And when you combine this with state taxes, many states, maybe many people living in states like California and New York, for example, will be paying close to 55 or 60% in taxes. These are Kamala's policies so far. Price controls, which we've spoken about, 28% corporate tax, 44.6% capital gains tax, and 25% tax on unrealized gains. We're going to talk about that latter pillar right now because this is one of the most important parts of it. This is really, really bad news for every American, not just for rich people, and here's why. Capital gain means that you sell an asset for more than you paid for it. That's always a nice thing. But how capital gains taxes work in the U.S., let's say you buy 100 shares of stock at $30 a share, that's $3,000 at $3,000 outlay. Then you sell that 100 shares of stock when it reaches 50. You collect $5,000, not counting commissions. And so you have a basic gain, a capital gain of $2,000, 5,000 minus 3,000. And so you owe capital gains taxes on that difference. Now, if you held the position for less than a year, you're taxed at the short-term capital gains tax rate, which is basically your ordinary income tax bracket. If you held the position for more than a year, you're taxed at the long-term capital gains tax rate, which varies depending on your income, anywhere from 0% up to $44,000 for a single person, 15% or 20%. And I'll put a link to this in the description notes below. Now, realized capital gains tax means that you pay the tax only after you sell the asset. Under an unrealized capital gains tax, you are forced to pay taxes on the position at a given point in time, just as if you had sold it maybe every December 31st or every April 15th. So in that previous example where you bought 100 shares of stock at $30 per share for $3,000, let's say today the stock closed at 50, your position is now worth $5,000. Under an unrealized capital gains tax, you would now need to pay taxes on those 100 shares as if you had sold them today at 50. Under an unrealized capital gains tax, most people will indeed need to sell some of those 100 shares in order to pay the tax, unless you're sitting on some extra cash. If you're sitting on extra cash, that's a melting ice cube due to inflation. So you're really damned if you do and you're damned if you don't. An unrealized cap gains tax could lead to especially heavy selling of stocks because of this and other assets right before the usually annual tax is due, because people will need to raise money by selling shares in order to pay off that tax. Now let's pretend that the asset in question is a house. Let's say you paid $300,000 for the house. It's now valued at $500,000 today. Where are you going to come up with the cash to pay this unrealized capital gains tax? A further complication, it's impossible to know what your house is really worth until you get an offer on it, and then you're not actually selling it in this case. So how do you determine the current value in order to calculate the tax? Don't worry, in practice, it's going to be some government official, probably at the IRS, who's going to provide you with the current value of your home to use in this calculation. And guess what? Guess how this is going to work? The IRS is, of course, incentivized to say that your house is actually worth $600,000, even though you know that it isn't, so that you will owe even more unrealized capital gains taxes on your house. And this is a game that governments, both state and local governments, already play with property taxes on houses. They try to appraise them as high as possible so they can charge you more in property taxes. And under an unrealized capital gains tax, it's going to be even more brutal. And it's funny, the numbers, they always work out to your disadvantage and to the government's advantage. If you're finding this video helpful so far, I just ask you to help to support the channel. Click the subscribe button, leave a like, leave a comment, question, suggestion for a future video. Share this video with a friend or family member. That really helps out the channel. And then if you want to help in a monetary way, you can leave a tip, a super thanks. You can also click the join button and get access to some special emojis and a couple extra videos every month. So you have to click the subscribe button, then you click the join button in order to see those options. Now we come to the really, really evil part of an unrealized capital gains tax. The government and the central bank possess a money printer. This money printer can be used to pump asset prices as much as the government or central bank chooses to do. And in practice, central banks are not very independent anymore as they used to be. Under an unrealized capital gains tax, asset price pumps lead to capital gains taxes owed every year. Money printer plus unrealized capital gains tax is really the best confiscation machine ever invented by a government, apart from just showing up with guns at your house and taking everything that you own. Now imagine an alternate scenario where you buy a house for $400,000 and then the money printers are turned on high speed. Your house is now worth $2.4 million due to asset price inflation that's been caused by the money printers. Your unrealized capital gains is $2 million. If the unrealized capital gains tax rate is 25%, as Kamala is proposing, you now owe $500,000 in taxes at the end of the year. In reality, you're not any richer than you were before, since not just your house, but also every other price in the economy has also skyrocketed thanks to the money printing. And now you owe $500,000 in unrealized capital gains taxes due on April 15th or due at the end of the year. And that $500,000 in taxes is more money than the $400,000 that you originally paid for the house. How in the world are you going to come up with that kind of money without selling your house or another asset? And once you pay it, you've now lost more money than you originally invested. You paid $500,000 in taxes. You originally invested only $400,000. So you're down a tremendous, tremendous amount, even though the value and price of your house has gone up a lot. And the really, really bad news as well is that you're going to have to do this every single year under this kind of cap gains tax. After just a couple of years, this is going to be everyone. And the plan could be to push a lot of people out of their homes, maybe so that BlackRock can buy your house, and then you'll be forced into a small city apartment because you cannot afford the unrealized capital gains tax on owning a house. In summary, the government already steals from you by taxing you. I would have less of a problem with this if the government actually used the money to help poor people to do good things rather than spending it on bombs and interest on the national debt, for example. The government, in addition to taxing you, also steals from you using inflation caused by their own money printers. And this inflation has another subtle and pernicious effect. Inflation every year pushes you into higher and higher tax brackets. Since the tax brackets are based on income, you get a raise every year, or hopefully you get a raise every year because prices are going up and there's inflation. And these tax brackets are not adjusted upwards as quickly as they should be given the inflation. So inflation pushes everybody from the poor to the rich into higher tax brackets every single year over time. Now, when you invest and your asset appreciates because it's a good inflation hedge, the government calls that a capital gains tax and says that you owe them even more money, even though all you've done is to try to shield your savings, which you probably already paid income or capital gains taxes on when you first earned the money. All you're trying to do by investing is to shield your savings from government-caused inflation, and now they want you to pay taxes, capital gains taxes, on that hedging that you're doing. So if you're not cursing out loud and punching the wall at this point in the video, you're probably paying very little in taxes and are already living off of the government and other people's hard work and taxes. Now, some people on Twitter are pointing out that this unrealized capital gains tax, as it's currently written, is only going to apply to people with net worths or income in excess of $100 million, which is obviously not a lot of people. The problem with this sort of argumentation is that taxes always start off on just being on the very rich. For example, the income tax in the US, it only affected people who are making $3,000 or more per year, which in current terms is probably close to millions of dollars, and it was a 1% tax. Now almost everyone pays an income tax in the US. So what happens is they usually start these taxes at a very high tax bracket or high net worth, and then they slowly lower them over time. And they don't even need to lower the brackets over time because of inflation and possibly hyperinflation. Everyone eventually ends up in these brackets. So at some point in a couple decades from now, the average American net worth will probably be $100 million because the US dollar will have been devalued so much. So this is one problem with passing taxes that you think are only going to affect the very rich. They always end up coming back, if not to bite you, to bite your children and grandchildren. Unrealized capital gains taxes on the ultra rich will also affect anyone who owns stocks, and most people own some stocks as part of their retirement program, whether in a pension or whether in a 401k or individual IRA or something like this. So think of Elon Musk, for example. If I eyeball at his current unrealized capital gain on his Tesla shares, for example, something like $80 billion. So under Kamala's plan, he will owe $20 billion per year in taxes. That's 25% of $80 billion. That means he's going to need to dump $20 billion worth of stock every year in order to pay his tax bill. And not just him, also Bill Gates, Jeff Bezos, all of these tech oligarchs. And this is very bad news for anyone in America who owns any stocks. An unrealized capital gains tax, if passed, will instantly tank the stock market by 25, 50, 75%. This is unquestionable because of all the selling, the forced selling that's going to be built in. Even for someone like Elon Musk, $20 billion is quite a hefty chunk of change. This also means that the ultra wealthy will flee the US as quickly as possible. And this is not just a theory, but this is what's already happened in Norway when they passed an unrealized capital gains tax. They were expecting an additional $150 million in annual tax revenue, but $54 billion worth of wealthy people fled the country, costing them, in fact, $600 million in annual tax revenue. And so this ends up affecting mostly the working class and the middle class and people who are trying to save for their retirement. The rich are much more flexible and can just easily leave a country. Now, as we said, when a central bank runs the money printers on high, you're damned if you invest and you're damned if you don't. So don't think you can avoid this just by not investing in assets, because if you sit in cash, you're getting poorer every year because your old dollars are being diluted by the new dollars being printed by the money printers. If you invest in assets instead, your assets go up a lot due to asset price inflation. And at the end of the year, you then owe massive amounts of unrealized capital gains taxes. Now imagine this same scenario under hyperinflation, assets to the moon, capital gains taxes to the moon. You're broke. You've paid out everything to the inflation tax and the capital gains tax. So can you see now why you might want to have some Bitcoin? This is yet another reason why it's important to have some Bitcoin, especially if a situation like this unfolds and you need to leave the country and you want to take your assets with you. You don't want to leave them here. Your gold coins won't make it through the airport or past the border guards. Your stocks and bonds are stuck inside of your brokerage account, and they're definitely subject to this unrealized capital gains tax at a certain point in time. Your cash is stuck inside of your bank account, and the teller won't let you withdraw more than $10 due to the current state of emergency. And also, you don't want to be holding cash when you leave the country. You could get it stolen, or it's just going to lose value, because in a situation of hyperinflation, holding cash is one of the worst things you can do. And also your real estate, your house, for example, your primary residence is probably attached to its foundation and not portable. And that's why it's important to have some Bitcoin if we're going into a confiscatory and hyperinflationary economic situation, as it looks likely. If you don't have some Bitcoin at this point, you're basically going to be a penniless refugee if you need to flee the country, because economic policies like this are going to affect everyone up and down the economic ladder and will have repercussions for jobs, for unemployment, and for societal chaos as well. At the end of the day, your assets are going to be worth a tiny fraction of their original purchasing power because you've been robbed by a vicious circle of inflation and capital gains taxes. And even without an unrealized capital gains tax, you could have a similar thing happen every year where you still just owe capital gains taxes because your assets are going up very quickly, but so are your costs, and so you need to sell some stock to pay your basic living expenses in a hyperinflationary regime. And as a result, you're having the same problem. You're basically losing a big chunk of your net worth every single year to inflation and to the taxes. So Kamala's policies so far, as we said, price controls, a huge raise in the corporate tax, very high capital gains tax, and a 25% tax on unrealized gains. We already talked about price controls a couple days ago. I'll link to that. I'll link to this video in the description notes below. Personally, I have to say I could never vote for someone who's promoting totalitarian and confiscatory economic policies like price controls and unrealized capital gains taxes. To even be talking about these things in the 21st century displays an appalling lack of understanding of economics and economic and financial history. It really is absolute madness. It's also a complete departure from our country's founding principles. These economic policies will mostly hurt the working class and the middle classes, as we said, since it's easy for rich people to use complex tax avoidance strategies or just pack their bags and leave the U.S. forever. In this case, paying an exit tax would be much easier than paying an unrealized capital gains tax every single year. So I can't tell you how to vote on social issues, but I can tell you that Trump or RFK Jr., love him or hate him, are much, much better choices when it comes to economic issues. And if we look at the history of this country, Americans revolted against a 3% tax on tea and paper. Now we're talking about taxes in excess of 50 or 60%. This is just absolute madness. And so it's very important when considering this to think about your Bitcoin and how much you have, and maybe you want to shift some money from other assets like stocks and bonds and real estate into Bitcoin for these reasons, because Bitcoin is much more portable. It's much easier to hide. It's much easier to leave the country with if you need to. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.